All right. Well, hello, everyone. Welcome to episode number 40 of Going Live with Good Soul Investment, where we talk macro markets, Tesla, some of the other stocks we cover, and we'll talk more about Twitter today and such and things. So, Matt, how's it going? How's your week been? All right. I mean, it's been I guess the macro markets seem to be settling somewhat, and we're down. I guess the Nasdaq is down almost 2% today, but it was up almost 2% yesterday. It seems like we're kind of bouncing back and forth in kind of a range now. What do you think, Matt?
Yeah, it's interesting because we've had such a strong rally the last couple of weeks, last month or so. It's been very easy to get kind of exuberant about it and want to go super aggressively long on some stuff. But you and I have been talking, and I've been a little bit cautious about things. So with the kind of big correction down today, I mean, any day doesn't really matter that much in the grand scheme of things. But I think everyone's trying to figure out, all right, where are we? Is this just a small blip in this otherwise upward trajectory that we've seen, or is it the start of maybe a bigger drawdown based on some macro factors? So I don't know the answer, but it's been interesting to watch for sure. How are you digesting everything right now?
Yeah, the macro markets I just feel like are kind of settling in, and I don't know if we're going to trade sideways for a while. I'm thinking. I mean, I don't know if it's going to be necessarily. We sort of correct. Whenever there's a big macro market, crash or swing upwards, I feel like it's just human nature that mass hysteria, everyone overcorrects, and like after interest rate change environment with the Fed signaling and the Ukraine. Russia geopolitical, unexpected turn of events. I feel like the markets maybe overcorrected downwards a bit, as it would normally do, and now it kind of came back somewhat, and now we're kind of in a sideways range for a while until the next thing. That's sort of my guess, but you know maybe the good stuff. This is what I like. I like it when the market's kind of trading sideways, because then the best stocks win out. Then it's a stock pickers game more than trying to float with the macro markets, and which is not fun
Yeah,
for anyone, in my opinion.
it's true. I mean, we've started increasing some shorts recently. We've talked about that, not in specific terms, but it's been interesting to see. Tesla's obviously had a really strong year considering everything going on in macro. I mean, basically flat on the year, a little bit down, I think.
Yeah.
But a lot of the other, kind of growth names have been just completely whacked. So,
Yeah.
as we've seen, as we've put on some of these short positions, they've done reasonably well so far. And uh, some of our long names, especially Tesla, have really outperformed a flat to down market. So,
Yeah.
I think that's
Absolutely.
probably a good strategy for now, kind of betting on divergence between the winners and losers.
Yeah. Yeah. Let's move on to the big news of the day, yesterday and today, though, is Elon, taking the biggest stake in Twitter of any shareholder, 9.3%, I think.
I think it was 9.2.
9.2%. Yeah. I mean, that's pretty significant. He doesn't half step things. he he
No.
he's not doing that just to be a passive. Technically the term is passive investor, I guess, was under 10%, but that doesn't mean in reality he's going to be very activist, like you see from his poll. Um, and I think that's great news for not just Twitter stock, but also for our freedom of speech and censorship not getting too crazy and such. And I don't know. I think there will be some you know uh, conflict from time to time with people saying, "Hey, Trump shouldn't be allowed back on," or whatever. But I think overall, in the big scheme of things, it's a very positive development. What do you think, Matt?
Yeah, I do think it's positive. Just maybe a quick housekeeping note too, just for those listening on Twitter Spaces. We are going to be going over my model, which we'll be doing a little screen share on. So if you do want to see those details later on, you may want to switch over to the YouTube live stream.
Yes.
But yeah, back to the Twitter thing. We talked about this a little bit last week of just kind of the importance of free speech, and I think there's a fair conversation to be had about whether being a free speech absolutist is right or wrong. But
Hmm.
I do think most people would agree that Twitter has and most social media has gone too far in kind of the censorship camp. So I think Twitter. there's a lot of low hanging fruit there on things that they could be doing better. I mean, like kind of the most ridiculous one that everyone's aware of is the edit button, which is like, well, I don't know why they haven't done that for so long. It's like the number one complaint that like you got a little typo and it's like you can't you just can't fix it. So I can't think of the number of times I've like ended up deleting tweets and had to redo
Yeah.
things.
I
Well,
initially thought that, but I would actually disagree. I thought about it, and then I replied to his thing saying, I don't think we should have an edit button, because I thought about it and I was like, there could be all kinds of problems with, like, if you're a mass influencer like Elon, or someone that has millions of followers, and you tweet something, then instantly within a few seconds you have like hundreds of retweets, and then you edit like one word so it changes the whole meaning of the sentence. What happens then? Do all the retweets get deleted? I mean, I feel like if you edit it, it should just be an automatic maybe delete of your tweet, and then an automatic new tweet. That's, maybe just an easier way to delete and retweet by
yeah,
making it seem like an edit button. Because I don't think you should be able to edit something someone has already replied to and then it still stands. And it looks strange and odd then. And then you add like, oh, people can click on it to see what the previous history of the tweet. That just gets too complex, and like, I don't know. I just
yeah,
feel like simple is
yeah.
better.
Yashu says in the comments here, please no edit button. So like maybe it's
Yeah.
not as black and white as that, but I think there's ways to get around it. But like today, for example, I was tweeting something and like it said I was trying to say tongue in cheek, but my autocorrect changed it to tongue in share, like the singer Cher, and like tongue in share is like way different. And like I'd love to just
Maybe we can just turn off
edit.
autocorrect on stuff, because I think a lot of the edits are a result of the autocorrect screwing up our typing.
Autocorrect is horrible. Like talk about an
Yeah.
AI that has not made any improvements in the last like 5 to 10 years. Like autocorrect
Yeah.
is horrible.
Autocorrect and the automated like operators you speak to when you call centers. Those are the worst
Yeah.
AI stuff out there. I don't know. But yeah, I mean that's interesting. The edit button should be like a first low-hanging fruit to try to tackle, but it's hard to even come to agreement on how to do that, I guess.
There's probably some like maybe it's even like you color it like a shade or and say edited tweet or something like that. I think there's probably ways that you could do it. I think in YouTube comments it actually says if you've edited your comments, and it seems like there's ways to get around it, and you can see an edit
Mhm.
history or something like that. But yeah, I mean aside from that though, I mean I think just a more kind of open dialogue of different points of view would be beneficial. So
Yeah.
I do think that they've kind of gone too far and like kicking people off the platform and not letting certain views
Absolutely.
be shared. And I
Yeah.
think pushing back a little bit on some of that culture would go a long way.
Yeah.
But then on like from the business side too, there's a lot of low hanging fruit. Like there was an interview that we had we've done some work with Prometheus alts lately on and they had
Yeah.
a guest on one of their channels. It's basically saying like the business has been so mismanaged. Like Jack
Whitney
basically didn't.
Tilson, famous hedge fund manager they were interviewing. Yeah. Anyway, they were
Yeah,
saying what?
that's right. Basically just saying like they've had no focus on monetization whatsoever, and which is true. Like you like they're just kind of playing around with it now with like the super follows and stuff. But it's like it's almost as if it was more important as like a lifestyle or like a cultural kind of business for Jack Dorsey than it was like an actual business that was focusing on profits. I haven't seen anything from Elon's comments that he'd be focusing on that, but I do think the business as a whole it trades at a discount to some of the peers out there. If you look at the
Yeah.
valuation metrics, so if they do take this stuff a little bit more seriously, I think there could be some valuation upside. But there's been a lot of
Yeah.
disagreement among that. Like I know Gary Black's been like very critical of this whole thing. So I don't know.
Yeah.
It's
Yeah. I
interesting
mean, I
though.
think
What's
the the stock itself, the Twitter stock, I think it's really good long term for the stock, and in short term, the price is going up because I think enough investors are, realize long term this is very good for Twitter stock to become, for Twitter to be more of a viable business in the future if Elon Musk is playing a big role in it. There's nothing that Elon Musk touches that doesn't turn into $1 trillion company, it seems like, so it's there's a lot of potential here with like neural. I think in the future, like 10 years out, 20 years out, like a neural link, Twitter could be like the application for us to communicate via neural link or something. I don't know. I'm just thinking 10 or 20 years out. That's kind of crazy. Then you have Starlink, and
Mhm.
Elon can control the delivery of the communications with Starlink, so that can't be, firewalled or anything. So there's a lot of there's a lot of things that synchronize. What's the word? But it's synergies. There's a lot of synergies. Yeah. So we'll see what happens. Gary Black, I
Yeah,
know some others are vocally critical of it, like taking his attention away from Tesla. Elon's going to do what he wants to do. He probably spends enough time thinking about it where now he can do something. Maybe he'll spend less time thinking about it because he can fix these things.
yeah, yeah. I mean, and he's also made the comments years ago, like he was going to start a newspaper or something like that called Pravda, right? Where basically people
Yeah.
were, it was all open source, and people had sort of like a rating over time of like, I forget exactly how he worded it, but like you could see, more clearly kind of biases over time, and there'd be like a ranking system and that sort of thing, and that would all be kind of open source. He's been very vocal about trying to open source more of this. So um, I think that's a great idea, honestly. I mean, so much of media, both traditional and frankly a lot of social media lately has just been like so incredibly inherently biased and mostly in one direction. So I think opening that up and you just kind of letting a little fresh air into this social media platform is probably a good thing. And I'm sure it won't be a straight line. I'm sure there's going to be some hiccups along the way, some things that they pilot and try out that don't work necessarily. I'm
Yeah.
skeptical of like the Doge tipping, for example, but whatever. Like let's just it's fine. Um,
Yeah. Yeah. Yeah.
but I
Yeah.
think just trying something new is going to be a good thing because things have gotten so
Yeah.
divisive, and I think we need to try a different way.
Yeah. And Elon is not afraid to try. He makes things happen. So we'll
Yep.
see what happens with that. And I'm sure we'll talk about it in the future as more things come out. Elon's on the board now officially. Um, but let's move on, I guess, to the main event. Tesla had their they had their production and delivery report a few days ago. About 310,000, I think, delivered and 305,000 produced, something like that. So I think that's about exactly in line with the midpoint of what people expected. So that's unusual. Usually Tesla seems to either beat by like 10% or a couple times it seems to be unusual where they're almost the people estimating are almost exactly right. So I'm overall very happy with that number, like given the challenges, like Elon said. I think it just gets better from here. Traditionally in years past, Q1 has been a tough quarter to match the previous year's Q4. It seems to have been like that many years. So many years, I feel like Q1 has been less than Q4, even though the business overall is growing. So at least
Hmm.
it's pretty interesting to me that they even beat Q1 in terms of delivery. I mean Q4 in terms of deliveries. That's a good sign in my opinion. And it's going to get better the rest of this year every quarter. What do you think, Matt?
Yeah, and it also used to be a quarter where they would kind of build up inventory. So typically
Hmm.
demand is lighter in Q1 across the automotive industry, and so they would kind of produce as much as they could and build up inventory, and then they would kind of draw that down over the next couple quarters. But what we saw instead was like inventory was really tight coming into this quarter, so I didn't really think it was going to be possible for them to draw down inventory. But I think probably with the Shanghai plant shutdown at the end, and demand just being so kind of like off the charts high, people are taking like whatever Tesla they can get, and frankly paying top dollar for it.
Yeah.
So I was really surprised though, even with all that they were still able to draw down inventory by 5,000 units. I haven't
Yeah.
done the math on exactly how much finished inventory they have, but I can't imagine it's more than like 10,000 units or so at this point.
Yeah, I think
So
I
they're
thought I saw someone say it's like 2 days supply, or I don't know exactly what, but
yeah,
it's a record low, right? The inventory in terms of how many.
it has to be a record low, yeah, in terms of days of supply. So I mean that's just such a ridiculously small amount of inventory to have. So
And do you think this makes a
definitely.
difference in is it going to make a material, like, is it just marginally different where it's not going to make a huge dent in the cash flow or what? I know when the inventory is like zero, the cash flow is like super efficient, right? But when there's a large
Mhm.
inventory, the cash flow is not as efficient. So do you think this decrease is just a kind of a marginal difference in the cash flow given how big Tesla is now, or do you think it's going to be meaningful? I guess we'll go into your model and we can see.
Yeah. So I haven't done in this model. It's more focused on earnings per share, so it doesn't get into that level of detail. My kind of bigger DCF model has that level of detail in it.
Hmm.
But generally speaking, if you are delivering more than you've produced, that's a positive thing for your cash flow. But then the reverse is also true. If you're delivering less than you produce, then it's a negative hit for your cash flow. It
Yep.
won't be a huge difference this time around, to be honest with you.
Hmm.
Q4, I think they exceeded deliveries. Deliveries exceeded production by, it was around 10,000 units, I want to say. And so this time it's about 5,000 units. So you'll have, a little bit of a buffer, but, it's kind of compared to where they were in Q4, it's not going to be a huge thing. And I think, frankly, analysts are so kind of used to this information by now that even if they were building up inventory, I don't think it would necessarily be viewed as like a negative thing for the stock or anything like that.
Hmm.
But
Okay.
yeah, we can dive into the
Yeah,
model
let's
if
pull
you
up.
want now.
Matt's going to share his screen on the YouTube live channel, and this is being recorded on YouTube and Twitter Spaces, so anyone can go back and look at
All
this.
right. So let me know if you can see my screen now.
I can see your screen. Our pictures, our faces are kind of covering the bottom right corner. Yeah, it's a little better, but it's a little smaller. Maybe go back to the other way. Just be aware that the bottom of the font is better here, but just be aware that below the 1821243 you can't see.
Okay. All right.
Okay.
That is good to know. So maybe just to quickly orient everyone here, the way I like to do this is we have the previous month's actuals here, column N. Then column O is going to be my projections for next quarter for Q1. So I'm
Mhm.
assuming modest price increases for the Model 3 and the Y. So bring that up to $49,500 on average. They've had a lot of price increases lately, but the backlog that they've had has been roughly 6 months on average.
Mm.
One of the curious things, though, that may impact this a little bit is the prioritization they were giving for higher trim variants, as well as for cars with full self-driving. So I've kind of assumed even like the full self-driving now that has a $12,000 price, but I'm assuming there's a bit of a backlog that they needed to work through before they can realize that full amount of the price. So I've
Mhm.
assumed kind of like a weighted average that kind of weights more toward the previous, like the orders that would have been placed in previous quarters. But I could be wrong on that assumption.
Mm.
Um,
Okay.
so kind of going through here, we've got the actual deliveries. So 310,000. I've not assumed a change in the kind of global full self-driving take rate. I left that at 15%. That may be slightly on the high side. Again, as I've said in previous quarters, Tesla does not break this information out. I'm kind of trying to back this out based on the data that they have in like the 10Qs and the 10Ks, especially around the deferred revenue balance. So I'm looking at how quickly that increases over time, and it's not a perfect methodology, but using that, I'm assuming they have kind of somewhere close to a 15% take rate.
Mhm.
And if I'm a little bit high on this number, then that means that I'm a little bit low on the automotive gross margin. So even don't
Okay.
don't just assume that this number's wrong, and so it's an aggressive model. I try to be
Okay.
very kind of middle of the road. So then with the full self-driving subscriptions, I'm assuming there's 58,000 of those, which is just kind of a small percentage of the overall global fleet.
Mhm.
And again, that might be a little bit high, but it's a relatively small dollar value item. You can
Okay.
see it's only $35 million here when you calculate out everything. So getting down here to full self-driving, this is what the way that I do it here is very different from the way most Wall Street analysts are doing it. Because full self-driving is pure margin, I think it's really important to break this out separately. Even though you can't estimate it correctly, I do think
Mhm.
that the right way to do it is to just estimate as best you can and then just kind of adjust over time. So what this is saying is that there's $573 million of full self-driving cash that's cash intake. Only 42% of that gets recognized on the income statement. So you end up increasing your deferred revenue balance by what was it, around $250 million or so. And then the other $330 million does get recognized this quarter as revenue. So then adding this together with a small amount of like acceleration boost, and then I've got 300 million of regulatory credits coming in.
So we're just
Um,
putting 300 million, but it's like just to be a round number, just about the same as last quarter. Is that why that's like the phantom
yeah,
asset we've talked about in the past that we really have no visibility on, but
it's
just put it in there. That's like
yeah.
no real indication, right?
There's no real indication. I mean, I do believe that it's very likely that they've got a higher amount of these credits that they can kind of use as a like a lever to kind of increase revenues in any given quarter. But I've said that in the past, and I've kind of been wrong. So
Yeah.
just for conservatism and the humility and recognizing I've been wrong in the past, I wanted to try to keep that where it has been historically. So
Okay.
yeah, 300 million, but I mean, it wouldn't surprise me at all if Tesla just surprised us and posted like 600 million or something like that, because they're selling so many more cars. Um, even though the price is going down, to me, it seems that the increase in their deliveries in markets which have this requirement are outpacing the kind of decline in credit pricing. But we'll see. We just don't know. So adding all that together, and then adding in lease revenue from my other DCF model, which is just kind of too complicated to put in here,
Yeah.
I'm getting total automotive revenue of $17.2 billion.
Okay.
Then energy revenue, I have increased this quite substantially. Q4 was really light. So I'm assuming that there has been kind of a return to growth in Q1, but that could also be wrong. But because it's actually such a low margin business, and it's actually historically negative, or at least last quarter it was negative, it doesn't really materially impact the margins. So the revenue might be too high, but the margins likely won't be much of a difference. And then services, I've kept flat. That might be a little
One
bit
thing
of a
about the energy revenue, that includes like the solar roof and such, right?
yeah.
And they had increased prices of the solar roof like 6 months ago, 9 months ago, and it like twice, I think, in the last like not 6 or 9 months. So I wonder if some of those price increases are going to start playing into the margins for whatever that portion of the energy revenue is. We'll see.
That's what I think should happen over time, but it also seems that they've really struggled with deploying these. I mean, the installation
They
crews
have.
just
Yeah, I
have
think
not
so.
been out there. So
Very
yeah,
manual. They need the bot to do it maybe one
yeah,
day.
and
Yeah.
it sounds like they've got a new version of the solar roof that's going to be released soon. And so,
Yeah.
I'm thinking they may just be kind of biding their time and waiting for that new version,
Yeah.
which I don't know the details of it. They haven't really said much on that, but I'd imagine it's going to have a better yield or lower price
Yeah.
or easier to manufacture or be easier to install or some combination of all those.
Yeah.
Um,
Sorry to
but
interrupt you
anyway,
again.
no, it's good. Then services revenue. So this one actually probably should increase this a little bit. Even now that I'm looking at this, I kept it flat with Q4, but this includes like used car sales and
Oh, that
some
should be
other
up.
things
Yeah.
that I think are likely to be up. So yeah, let's just go ahead and increase that, say 15%, just to account for
Okay.
how strong used vehicle sales have been.
Yes. Yeah.
So then moving down to the core manufacturing margin. So this is how profitable is just their making of the vehicles, the physical manufacturing, when you exclude full self-driving, regular credits, and all this kind of software sales that they have. That took a hit in Q4. It was down pretty substantially, actually. In Q1, they do have the benefit of some price increases at the top line, which should pad this a little bit. But I don't think it's prudent really to assume a whole lot of improvement here, given the issues that Elon was stating they saw this quarter. So it wouldn't surprise me if it was maybe a little bit of improvement here due to the pricing. But I'm just a little hesitant to give them too much credit when we know there were so many logistics issues and supply shortages in the shutdown in Shanghai and that sort of thing. So we can play around with that as a sensitivity analysis, but for right now, I'm leaving it essentially flat with Q4. So adding all that together, you get just over $5 billion of gross margin, a 30.8% reported gross margin. So this is comparable to what they actually report on their Q1 letter that they'll release in a couple weeks. And essentially, this is kind of a flat margin, slight improvement, but essentially flat from Q4. Energy gross margin, I'm assuming a modest improvement here from minus 7.4% last quarter to just minus 4%. And then the services gross margin, I'm assuming increases from 1.5% to 3%. And again, the main driver there is just the kind of improving profitability of trade-ins and used vehicle sales.
Okay.
But these two, like the minus 49 million gross profit on energy is partially offset by 37 million in services. It's basically break even. It doesn't really move the needle at all. So then getting to the operating expenses, I'm assuming a 10% increase in R&D expense in Q1. And then the SG&A, this I have a pretty significant decrease, but the reason for that is, if you remember in Q4, there was that roughly $300 million payroll tax expense, which was related to the stock-based compensation award that
right.
Elon had.
Yeah.
So you have to kind of back that out to normalize for Q1 going forward. So I backed that out and then grew that by 10%.
Okay.
So you're getting 658 million. And then the stock-based compensation award, I dropped that down a little bit as well, because Elon is kind of over the majority hump of all those tranches of the CEO compensation package. So they still have, I mean, they're still growing the rest of the business. So you still need to account for a decent amount of stock-based compensation to the rest of the employees. And his CEO award is not fully awarded yet. So you've got to include a little bit of expense. But I think it's likely to decrease this quarter.
It looks conservative. Yeah.
It doesn't really matter, to be honest with you, because you back this out anyways for the adjusted EPS. But it does impact GAAP earnings.
Okay.
So then adding all that together, you get $3 billion of operating income. There's just a lot of kind of math and very small items down here.
Wow.
So I'll skip over.
That's 500 million. Q4 was 2.6 million. Now we're saying about almost 3.1 million. So it's extra 500 million of operating income. 500 million. Yeah. Wow. It's a big difference. All right, sorry, go on.
No, it's good, but I mean, most of that though is like that CEO award. Well, I mean, there's a couple kind of offsetting.
300 million
that payroll tax thing was a kind of big deal. But when you add all this together, I'm getting $2.20 of earnings per share on a GAAP basis, and $2.56. I probably can't see that. $2.56, which is the kind of adjusted EPS or the non-GAAP EPS, which is the kind of gold standard. This is the bottom line thing that most of the analysts are trying to get right. Last I checked, Wall Street was at $2.26. So I'm still assuming a pretty significant 30-cent beat. But looking at this sequentially, like quarter over quarter, it's basically flat earnings per share when you take everything into account. So that's kind of my number. It's probably not as flashy. It's Rob Maurer said the production and delivery report was going to be like kind of boring, and he was right. It was kind of boring. It was basically just flat. I try to be realistic, and I don't want to be like an Uber bull on this stuff. I think the coming quarters are going to be super exciting, but I think this quarter may be a little bit more of a muted response. I hope I'm wrong, but this is my kind of middle of the road estimate.
Yeah, absolutely. Now, one thing I was wondering if you could adjust to take a look at, go to the very top again, the average selling price of the Model 3 and Y. Last quarter was 48,709, right? But this quarter you're saying 49,500, so it's just increasing like $800. I don't know. I kind of think it might be higher. What if you put in like 51,000 for that? I'm just curious.
Yeah, so you could do that. It's hard to know, because there's the whole mix of like what's made in China versus the European and deliveries. But yeah, let's do that. We can go ahead and change any of the assumptions you would change, and let's just
this is
see
like
what
my
that does for our results.
This is my conservative price for, and then I would want to curious how it changes if it's my kind of more optimistic. So what is this? Just changing that one thing alone, I guess. What how does it impact?
$2.64. So that's like
not much different. Yeah.
It's modest. It's almost a dime.
I guess so. All right, we'll put it to 55,000 now. Go to 55,000. Just because they sold so many more in Europe. That's aggressive. I know, but they sold so many more performance versions were prioritized and such.
Full self-driving, you could probably adjust as well if you wanted to get, because that's going for 12,000 now. So if you want to assume that they
put 11,000. 11,000. Yeah, this is my optimistic. I guess. What else can be optimized?
You could assume an increase in take rate.
What about the average price for the S and the X at the top? Because they increased those prices a while back. It's still at 120. Maybe get 130. Put it at 130 because there's a lot of plaid Model X's going out. And
there are a lot of plaid Model X. That's true.
Okay. Now, what else can we make it more optimistic? Go down to the take rate, make it 20%, 15 instead of 15, because maybe all this news of like insurance and all that increased people's interest.
They did also prioritize, at least for a short period of time, orders that had full self-driving to be delivered in Q1. So it's possible that you did see a significant increase in take rate overall just
Yeah.
because of that.
Yeah. Yeah. So let's put it 25%. 25%.
Ooh,
This
now
is
we're
like,
getting real aggressive.
yeah,
All
this
right.
is this is like my aggressive, like, all right, highest end estimates here. Um, what else can we change? Go down, I guess. All the things in blue are the things we're basically looking at, right? To change.
Yeah. So the other
Credits.
impactful
Go
one
to
would be
credits.
this.
Go to
Oh,
500 million
credits.
for credits. Yeah, 500
Okay.
million for credits. They're bound to rebound in the credits sooner or later, you think?
The core
Um,
manufacturing margin's a pretty impactful one too.
yeah, let's change that to 28%. They got the giga presses going. Things are a little more efficient. You know, um, make it 28.2%. I'm feeling kind of crazy. Make it
All
to
right. Point two. We're getting really specific too. I like it.
yeah. It's funny. I put like things to heat up in the microwave, and I never put like 20 seconds or 25. I'll put like 22 seconds or 24 seconds. It's weird. All right, go down, keep going down. Um, let's see.
There was one quarter where their R&D actually went down sequentially, so it's possible too. You could see a
Let's keep it the
decrease in.
same. Let's
Let's
keep
keep it
our
the same.
R&D the same. Yeah. I mean, I think that's realistic, but it's not, conservative. But it's realistic. Stock-based compensation. I don't know if you said it might not change much, but let's decrease that to like 400 million or 350. Because I think,
And again, that won't change the adjusted earnings per share, but
okay.
it will change the gap.
Okay. And then scroll down. Let's see what else we can change here on this.
Well, you're at 340 now. 345. Wow.
Oh wow. Okay. All right. Well, I think that's about my max is 345 per share, I guess. Wow. Okay. That could be a big upside. The whisper number is probably, I don't know who can measure does anyone in the comments know what the whisper number is? I see a lot of good comments. I haven't been reading them, all of them, or had a chance to comment on them. But if anyone has access to like the whisper numbers, I know there's like certain sites that we should look that up. Nothing's official, obviously. It's just like estimates of what the whisper number is, but it's almost always higher for like a growth name. So I wonder if it's like 280 or like $3 or 270. I don't know.
One other potentially impactful item is the income tax rate. So it's been really, really low lately. Last quarter it was actually 11.1%. I
Hmm.
don't think that's sustainable quite that low, so I increased it to 19% in Q1.
Hmm.
But it's definitely worth looking at that too. So if you just keep that rate flat at 11.1%, then that'd be 376. So
Wow. Yeah.
um, that's a really, really impactful number. You get basically 30 extra cents with all these other assumptions here.
Wow.
Maybe 15% is a little bit more of a reasonable middle ground. But that's another one that tax rate has come down over time, and it's
So put that
surprised me
into
how
our
much it has.
optimistic. Yeah, we'll put that in our optimistic. So 3.76 are like most optimistic of optimistic scenarios that we think is somewhat there's a chance it could happen. Maybe let's just say. Wow, that's pretty high. That's almost 4 billion. That's about 4 billion in net income. Yeah, just over. Yeah.
Yeah, and so then you can say, all right, if you just annualize that rate, and
Hmm.
what's the stock trading at now? Is it back to 1100 or is it 1090 or something like that?
Yeah, scroll down a little bit so we can see what you put in there. You have 15. So it should be 16 is the annualized, right? 4 billion.
So it's 1505, 376 times 4.
Earnings per share. I'm just thinking round numbers of billions of dollars, $16 billion.
Oh yeah, no, earnings
And
per
then I
share.
think about I'm then doing market cap. Anyway, go on. Yeah.
So I'm just saying that what's the PE? So even at 1100, if you were to have this, 376, you'd be trading at a current PE, not even a forward PE of 73.
Mhm.
So that's still pretty low, but again, the market's clearly not expecting earnings to be 376. And frankly, I don't think you and I are either. This is
No,
clearly
this is
like the,
just
the
like
best case scenario.
the best case scenario. Yeah,
Just
exactly.
hard coding over. So my numbers were 256. That's a little over 100 PE, 107.
Okay.
That's a little bit more, realistic, but
Yeah,
even
more
then,
realistic, conservative, and realistic. It could be worse than that, worse, but not much worse, probably. Yeah.
yeah, yeah.
Okay. All right. Well, this is really cool. Really fantastic, Matt. I mean, I guess one person said I would change the energy margin as they have stopped the less profitable side and focused on batteries. Hmm. Another person said that was from Mark Gomez. Another person, Evan, says the quarters felt quiet. Haven't heard anything. Um, and service should be higher. It should be counted as a fixed income per car. So more cars on the road with higher income. I don't know. Yeah, we'll get
Yeah,
to.
the interesting thing with services and energy is like I've gotten super aggressive on those in the past, but like
Mhm.
frankly, the earnings per share impact of those assumptions gets completely dwarfed by how profitable is the core manufacturing.
Mm.
So like you saw, we were playing around with the gross margins on energy and services, and it's like minus $45 million on the energy side, and plus was it $30 million on the
Yeah.
services side. So it's like even if you double the margin, it's like okay, we're talking about $60 million on the services side. I mean that's rounding error of just credits, for example,
Yeah.
let
Yeah.
alone like the automotive gross margin. So
Yeah.
people may very well be right that energy margin or services margin should be higher or lower. But in my mind, those just they wash out at this point. In the future, they'll be more impactful. And Q2 in particular, services is one to watch out for because we're going to have a lot of vehicles coming off lease for the first
Mhm.
time. So Tesla
Mhm.
may be able to resell those at a really high rate.
Yeah.
Um,
Yeah, we talked about in
but
previous quarters. Yeah.
right, yeah. But for this quarter, I think it's probably likely to be margin neutral between the two.
Okay. All right. Exciting. So let's go to Q&A, I guess. We got about 20 minutes or so to go cover people's Q&A, and we'll have Alec queue up some questions. He's been so from Evan Glansman. Question: what are your thoughts on Maker DAO, Maker DAO?
MakerDAO, yeah.
Got sent down a rabbit hole from Matt's tweet yesterday. The functionality, utility, and aspirations were intriguing. Matt, you want to take a stab at that one?
Yeah, I got really interested in this also, to be honest with you. So I'm not a crypto expert. Like I have done enough research to think that I'm kind of dangerous in this space, but it's so technical that I'm kind of aware of the limitations of how much I know. That said, I think it's really really interesting what they're doing. So MakerDAO, for those who maybe didn't see my tweet, they announced a deal with Tesla. They're doing like a 7 point something $1 million financing through the MakerDAO, which essentially lends a stable coin that's pegged to the US dollar. So Tesla is going to get like a $7 million loan to pay for a construction of some service centers, it sounds like. And then they're going to pay like a 2.25% interest rate, somewhere in that neighborhood. So Tesla gets like the benefit of a lower interest rate. And this MakerDAO thing is really interesting. So at a high level, it's really it has huge potential to kind of disrupt the traditional finance industry. I mean, Tesla, there's no way Tesla could get like a 2% roughly asset-backed loan rate from any sort of commercial lender. So that on its own is interesting, and
Hmm.
it wouldn't surprise me if this opens the door to more projects like this down the road. You could imagine a larger lending facility that Tesla could use to construct like a gigafactory, for example, at billions of dollars rather than 7 million. MakerDAO is nowhere near kind of that scale to do something like that yet. But I think the potential is really exciting. And then it's even broader than that because there's a very limited pool of assets that MakerDAO accepts as collateral to back these types of loans. But they are interested in kind of continuing to expand which assets could be used as this collateral. So yeah, I've gone down the rabbit hole in this a little bit just in the last couple of days. I find it just fascinating. So I would say I'm kind of like mildly optimistic and bullish on MakerDAO and on Ethereum in general. But there's a lot more I want to kind of research and understand. Um, One of the thoughts that I had when I was looking through this was like, I remember Warren Buffett said, if you don't understand how something makes money, you really shouldn't invest in it. And that's how I feel right now. Like I feel super excited about it, but I don't really
Yeah.
understand like how
Yeah.
this is sustainable in the long term. So I want to,
Yeah.
understand that a little bit more.
Yeah. All right. Next question on the YouTube comments from Ryan Graf Sakasov. Question: do you guys think that vertical takeoff landings will be part of Elon's master plan for Tesla?
Ilana, he's going with the emasculated.
Elona's. Yeah. I think that the vertical takeoff and landing supersonic electric jets um, are part of Tesla's plan um, in the future, or will be. I just don't know if it's going to be mentioned in Elon's master plan part three. His master plan part three might be a little more broad. I'm thinking because he mentioned his other companies are going to be rolled into it. So instead of mentioning specific products going forward, he might just mean like all transportation will be electric except for rockets, and then we're going to have tunnels everywhere so there's no traffic, and we're all going to connect through neural links with Twitter. And I don't know, I'm just imagining what his master plan could like be, very broad, but like things that he'll deliver on, but kind of more broad, as opposed to like we're going to make, you know, a faster version of the Roadster, and we're going to make an electric jet, you know, because that's almost, you know, the jet could be mentioned, but I don't know, you know, I kind of suspect it's not going to be part of the plan, but I still think it'll happen. What do you think, Matt?
Yeah, I agree. I mean, to me, the VTOL is like the one of those back burner projects that Elon will get to whenever he has the bandwidth and the time to do it.
Yeah.
So I don't think he's going to want to kind of peg himself to having that as a deliverable. I think he may just say something broadly, like you were suggesting, like electrify other modes of transportation or something like
Hmm.
that, and kind of leave it more generic.
Yeah.
Um, but yeah, I would personally be a little bit surprised if VTOL is in there specifically.
Yeah. From Dalibor Andrew on Twitter: Twitter investment distraction to Tesla success, or can Elon simply do it all? Um, I think I think Elon can, you know, I think he's a big boy and knows how to apportion his time most efficiently. And Tesla, you know, we've said before, if something terrible happened to Elon, Tesla's already kind of on the road to success to become the biggest company in the world, we think anyway. But obviously, it wouldn't happen as fast, or it wouldn't have as long term, you know, success as they would otherwise if Elon was still there. But because that is in place already at Tesla, I think Elon can let his, you know, not micromanage as you know, as many things as he used to. For example, he knows how to delegate and marshal. You know, George, it keeps coming back to me, the line that George Hotch said in an interview with Lex Friedman once, where he said Elon is the best mass marshal of resources, you know, marshal of mass resources of anyone in like history, or that he's ever heard of or seen. So I think that's true. And I think Elon is so smart that he knows how to delegate things the most efficient way possible at this point in his career and his life. And he can get the right engineers or the right people and give them a few pieces of instructions, and knows how to check in on them and make sure that they follow through with his instructions or what his ideas are. That's just my thought. Matt, you have any thoughts?
Yeah, I agree. Like, I don't think Elon's going to be spending more than like 2-3 hours a week on like Twitter involvement, and that's frankly like
Yeah.
I think that's probably about as much time as he was already spending on this stuff. Like,
Yeah. Yeah.
Twitter's already like he's a pretty big user of Twitter already, so it's not like he's not aware of some of the issues. And like, one of the things he's complained a lot about is the bots, for example. Like, why is Twitter not taking the bot issue seriously? Like,
Yeah.
half of my direct messages these days are like bots, like people spamming me, like, "Hey
Yeah.
Smith, good looking, like, how are you?" Like, just like
Yeah.
blatantly, like, I know this is a bot before I even look at any further. And so yeah, it's like something they need to have, they need to get addressed. And so yeah, I don't think it's gonna be a big time commitment. I think he's gonna be able to handle it.
Yeah. Yeah. Next question from Dan Mac 51 on Twitter: thoughts on Polestar's SPAC GGPI after the Hertz deal? We've talked about Polestar before. I mean, we think Polestar has, you know, if anyone outside of China, it seems like Polestar has a legitimate shot at being relevant in the EV marketplace. So yeah, I mean, that's good news for Polestar. They're very, you know, connected to Volvo's you know, infrastructure and service network, and you know, and I think Polestar has a real shot to become relevant. You know, they're not going to be as good a brand as Tesla ever, in my opinion. But maybe they'll be able to sell as many cars as they can make, which, you know, all these EV makers are going to be supply constrained. You know, that's the issue in a lot of these cases. So, you know, they'll make probably as many as they can for the next few years and sell as, you know, 65,000 is a lot of cars. I don't know how many years. I didn't look in the details, but I wonder how long it's going to estimate it to take for Polestar to deliver that many cars. Did you happen to read up on that, any of that, Matt?
No, I didn't. I would imagine that takes a long time, and I think it
Yeah.
was up to 65,000. So I think it gave
Okay.
Hertz a little bit of like leeway in terms of like how many they actually wanted.
Hmm.
But I think it's probably likely to be like a little bit of like a scaled approach. So maybe it's 5,000 the first year and 10,000 the second year, something like that, and maybe it
Yeah.
scales up over time. But and Hertz would presumably pilot this a little bit to make sure the cars are well received and people are actually renting them. But yeah, overall, I'm kind of more impressed with Hertz on this, to be honest with you, because they seem to be really kind of embracing the EV revolution in a way that I think the OEMs are generally not, and most other kind of players in the space are not. So that was
Yeah.
pretty interesting to me.
Yeah. I see from Brad Hoff on there said Elon's made it clear VTOL makes no sense from a noise perspective alone. Elon refers to like flying cars. Yeah, electric flying cars makes no sense, but he's commented multiple times on supersonic electric vertical and takeoff landing jets. And that's a different ball game because that goes much higher in the air, maybe flies 500, 700 miles. And so it's just a very different thing than the flying cars that I think Brad's referring to that he thinks Elon commented on. And I also see another question about what do you think the cap in this is from Major Human. Where do you think this is an interesting question, so I want to read it. Where do you think the cap in global demand is for the Model 3 and Y at a 50,000 plus cost? That's a good question. The demand. I mean, it's already 50,000 plus the cars right now, basically, when you're buying them. So
Hmm.
the cap, I don't know. I mean, average new cars, I think like 40,000 in the US is like over $40,000 now anyway. Maybe it's closer to 50 almost with inflation lately, but I think I think especially with a lot of it depends on the full self-driving. So if they get this full self-driving mass, go into the markets, the masses with it this year, then the cap becomes exponentially higher in demand, right? You have fleet operators willing to buy as many of these as they can. You have a whole new industry evolving for this, $50,000, $60,000 car, 70,000 with full self-driving and long range, let's say. But it's a whole new industries pop up. And at that point, the demand, I don't know what the global, someone said 20 million is the most they sell. I think they could sell more than 20 million globally. I think the demand is there for more if they're the only ones with like full self-driving applicable basically anywhere, as opposed to geo-fenced full self-driving in a particular city only. I don't know. You have any thoughts on that, Matt?
It's so hard to say because, like, the way that people were thinking about this, back in 2017 when the Model 3 was ramping, it was like they would look at the mid-size sedan segment and be like, okay, what percent of this segment can Tesla get? And we know now, 5 years later, that's the wrong way to look at this because people were doing that Tesla stretch that you talk about where they spend more on the car than has ever been spent before for most customers. Or you get people that are like, is it a luxury car or is it just a mid-sized sedan? Like so
Yeah.
they're kind of completely eradicating the traditional bounds of like the historic car market segmentation. So I don't know where the cap is, to be honest with you. What I do know is right now, like awareness in general is growing, and there appears to be way more demand than they're capable of supplying. Probably even, and I think that will be true, even once these new plants are up and running. So I don't know. I mean, can they do 10 million units a year of the 3 and Y? I mean, that seems like too much. Just like my gut reaction is that like no, that's probably too much like sustained demand for two models. But
Hmm.
I don't know. Like it's possible that they could be so disruptive and so kind of um, captivating to customers that maybe they can. Maybe it's just just like the new most popular car in crossover ever. But I
Yeah.
don't know. I would, my gut, and this is just a total shot in the dark, would be I don't know, maybe 5 million units a year between them, something like that.
Really? That's your demand, global demand as of today or
Like
as of like a year
long
from now?
term, like
Hmm.
what can they sustain like in 2030 or something like that?
Oh,
And
5
assuming
million, huh? I
assuming
think it's
no
like
full self driving. Like let's assume that
assuming
like
no full
robots,
self-driving.
yeah, which is probably the wrong assumption.
Yeah. I'd say
But
20 million with no full self-driving might be right, but with full self, if they're the leaders and like the top safety, full self-driving, Vic, I'd say it's higher than 20 million. That's my gut. And 2030 is like 8 years away. Yeah.
Yeah, I guess I'm thinking, by that time, like some people want the Cybertruck. They should have like I really want a larger car than Tesla makes right now because I've got
Yeah.
8 people in my
You're
family.
gonna
We
have to
can't
get the
all fit in a
semi
Tesla.
truck. You're gonna have to get a modded out semi truck, I think, Matt. Just for 6 kids, you'll be on kid number 7 or 8 by that. You need like all these.
My wife is like on my case. She's like, "Can't you just tell Elon like if he wants to like solve population collapse, he needs to make a bigger car?" I'm like,
Yeah.
he's responded to like 1 or 2 of my tweets. I don't think he's going to make a new product just because I tweet at him. Like, Elon, if you happen to be listening or anyone
Yeah.
has his ear, please make a
Bigger
big
cars
full
are needed for
size
bigger
like a
families.
Ford
Yeah.
Transit or something like that
Yeah.
that can fit all these Catholic families in there. Like my wife's like, you
Yeah.
make a killing like of all these families that have like 6 kids around us.
All right. That's true. All right. Next question is from Michelle Vitali. If Tesla post-split price is 100, will shorts and market makers have more ability to move stock price or same as now? Are you concerned the price can get pushed too low? I think it's the same. I don't think shorts and market make it's Tesla's too big of a market cap, too liquid at this point for shorts and market makers to really move the stock around, in my opinion, at this point. Maybe when it was a $5 billion or even a $30 billion stock at some points, I feel like there could have been some attempts at like not manipulate. Manipulating is a strong word. It's almost conspiracy thinking to me. It's more like just trying to downtick the stock with a large market order to scare everyone out or, something like that. But I don't think I think it's just too big now of a company. Like you can't manipulate Apple's stock price. Like no one even thinks that's a possibility. I don't think. You can't really manipulate Amazon stock. It's just Tesla's $1 trillion company now. It just doesn't seem like that's even possible at this size, in my opinion.
Yeah, I don't think market makers care about what level the price is. So to me, it's only what does that do to retail demand, which cares more about the stock price being lower. And in my mind, there's going to be more of a long effect from retail longs going in than some retail traders wanting to short. So I think it's more likely than not to be a boon for the stock.
Absolutely. All right, next question from Bertman Max on Twitter. Could Blue Origin acquire Rocket Lab? Someone else asked, I think last week, about if Rocket Lab could be an acquisition. I don't think so. I mean, who knows if Rocket Lab has been asked to be acquired already? It's very possible, right? I mean, it's like 3 billion valuation almost, I think now, or 4, but it's got all these services launching to lower Earth orbit, and Blue Origin isn't even doing that. No one else is really doing that. I think Astra had their first success launching something to lower Earth orbit a week or 2 ago, but that was like their first success in like 10 attempts, since, they got. So we'll see if they can do it more often. I don't know. But yeah, Rocket Lab has a suite of technologies, and I think we touched on it, but it doesn't hit us that Peter Beck is looking to sell out. He's more like, this is his baby and he wants to, realize a dream, what he envisions or dreams with it, and it's very founder led. Like Peter Beck's not looking to go retire on some island, and, this is his dream, and if he sells, the company's not in any financial distress as far as we can tell whatsoever. And so it just doesn't seem like Peter Beck would do that unless there's some kind of life-changing event for him. What do you think, Matt?
Yeah, I agree. It seems unlikely. I mean, the other piece I would consider is like I think with Bezos, there's a little bit of pride. Like if they acquire Rocket Lab and then all of a sudden start using that,
Yeah.
abandon New Glenn and all these other things they're working on, I don't think he would be ready to kind of admit defeat like that. And otherwise, I'm not sure that the synergies would be so meaningful that they'd want to do that. So possible, but seems unlikely to me.
Yeah. Did you see the latest Blue Origin launch? They were driving the people to the Blue Origin rocket on Rivians.
No, I didn't see that. Of course, it's like it's like a bad knockoff of Elon, right?
Yeah.
It's just like, oh, cool. Of course.
Yeah. We were trying to get someone. We cannot find a single person that's bullish on Rivian stock that is willing to come on our channel. Like I put out the tweet. I tried to search around and tried to. no one is bullish on Rivian stock that we can find. I mean, how is this stock
I'm
worth as much? I don't know. I
I'm
can't find
really
one person.
confused by that too, because we don't want to just like bash somebody. Like we want to really understand the bull case. Like
Yeah,
who's super optimistic and like what are we missing as
yeah,
investors that like
yeah,
this is a great and literally nobody has come forward and be like, oh, like I like the stock and I'd be willing
yeah,
to kind of share the bull case with you. We
yeah,
zero people. So yeah, if
yeah.
anyone
Even
listening,
Nikola at its height had some people that were bullish on the stock. I remember seeing videos of younger investors doing YouTube videos on Nikola stock way back when I was like, wow, I can't believe some people really buy into this. But I don't see anything with Rivian stock. I mean, the Rivian, the product, yeah, okay, some people love the product, that's fine. But if anyone here listening knows anyone that's bullish Rivian stock, please DM Matt and myself. We want to get them on our channel because we want to try to figure out what the bull case of the stock is. Yeah.
yeah.
From Brad Hoff, question: is there a limit to how many new plants Tesla is capable of opening in 2024? 2, 4, 8. Yeah, it's a good question. I think they first expand some of their current factories. Maybe they announce another location somewhere in Europe or like the UK or something, like, and somewhere else in maybe India they've been talking about for a while. I don't, so there are going to be more locations, but I think just as important or more important than the new locations is expanding their current factories. Fremont, they can't expand. There's too much regulatory stuff, but they purposely set this place in Austin because they know they can expand it very easily. And Giga Berlin, I think there's some plans to potentially expand it, but that's kind of a regulatory nightmare over there too. And China, they've already been plans and apparently to expand it. And so, Matt, you have any thoughts on that?
Yeah, I agree. I mean, I think the number is probably less important than are they in the right geographic locations to minimize, logistic cost and to kind of
Mm,
reach the local customers. That's really important. And then how many vehicles are produced out of those facilities. So yeah, I think like whether they have 8 new facilities launching in 2024, that probably is too high, but like if you have 4 facilities that are producing twice as much as you otherwise would with 8, to me that seems like it probably is a better, more efficient use of capital that would lower costs. But yeah, so that's what I would think of is what's the total output that they're driving towards.
yeah, yeah. I see Marcus about the Rivian saying he thinks Sandy Monroe might be bullish on Rivian. Yeah, he might be bullish on the product, but I don't think he's bullish on the stock. I don't know. If someone thinks he's bullish on the stock, well, maybe we can talk to him, but I don't think he comments typically on stocks.
Yeah, he's like I've seen like he owned Tesla for a while and like he's an amazing engineer. Like I wouldn't bat an eye on like his engineering chops clearly, but couple times I've heard him talk about like businesses or investing, it's just not
Mm,
his forte, which is great. Like
yeah,
Emmett and I are not going to do a car teardown ever, like, but
yeah,
we're gonna
yeah.
we'll happily dive into stocks.
Yeah, yeah, and Larry Apple says we don't miss anything there. The Rivian's at the valuation because of Tesla. People miss Tesla, or so they think and want something to get in early on, so they invest in Rivian. That probably makes the most sense to me, and that's too bad. Okay,
Yeah.
yeah. Anyway, all right. Last question. Let's do the last question. It's 10:33. We've gone about an hour here. From Jamil I break on the YouTube comments. Elon keeps writing that a small area in Nevada can power the entire US grid, or a small area in Spain can power Europe. Do you see Tesla building the solar farm in the future? Matt, I think you commented something interesting on his tweet about the Spain comment recently, right? What were your thoughts on
Yeah,
this?
so I caught a little bit of a backlash, so it's probably worthwhile to kind of explain what I'm saying, what I'm not saying, and what I think Elon is saying. So, for those who might have missed it, Elon was saying like Spain should just build like a massive solar farm that could power all of Europe.
Mhm.
And he's made comments like that in the past. Like he drew like a little red square over the Sahara Desert and said like, a square this big could power the entire world, and like that's no doubt true. Like his point is basically you need way less area than people typically assume that you need in order to kind of meet all the needs, all the Earth's energy needs. Um, my point is like clearly you're not going to put like a huge square of solar panels that's like 100 miles by 100 miles in the middle of the Sahara Desert because like you could certainly do that. It would produce a huge amount of energy, but you've still got the cost of transporting that electricity to where it needs to go.
Unless you
Um,
have a monstrous Bitcoin mine right there under the desert sand, mining tons of Bitcoin and Dow.
No,
I
you'd be
don't
mining Doge for sure, but
know. Doge. Okay, yeah. I'm just kidding. Anyway, go on.
no.
Sorry.
So you know the point is like um you have to, when you're looking at the total cost of energy as a consumer. So like I did the math on this like a year ago on my old YouTube channel. Like the average cost of electricity generation in the United States is like 4.5 cents a kilowatt hour, but then you're paying something like 7 cents or 8.5 cents, I think it was, on transportation and distribution. So you're paying like almost twice what the cost of generation just to transport it. And in
Mm,
fact, the cost of solar generation is more like 2 cents per kilowatt hour rather than 4 cents, which is like the U.S. utility average.
hmm
Just because like utilities generate incredibly inefficiently because they've got all these legacy assets that are really cost ineffective.
hmm
So my thinking is like when you're looking at like a 2 cent per kilowatt hour electricity generation cost, like looking at a place like Spain, which has great solar resource, and you can probably get that 2 cents there, versus like in Germany, because the solar resource is so bad, maybe it's more like 3 cents or even 4 cents. So that sounds terrible, right? Like Spain is
Yeah.
twice as good as Germany or like Finland or whatever, but you're completely ignoring how much it costs to transport that electricity, which, as I said, is like double the cost of the generation side. So I'm not saying that you don't need any generation. I'm not saying that like transmission is completely unnecessary, and you probably should have more solar in Spain than you do in Germany, for example. But I think it's going to be more economical in most places to kind of localize some solar, and probably have a battery there, to the extent that it's possible. We frankly don't have enough um, batteries capacity yet to do that in a meaningful kind of grid scale way. But over time, I think having localized electricity generation with some solar backup to minimize the amount of like grid transportation that we need is probably going to be more economical, but also will result in more like grid resilience, because you're not going to be relying on like one location that's generating huge electricity and then like worrying about like power lines going down and that sort of thing. So it's very
hmm
nuanced, and there's the like a huge amount of variables, and it's I could talk about this for hours because there's pros and cons to like both sides of the argument, to
I
be
could
honest with
tell.
you. But
Yeah.
yeah, so
Yeah.
I'm
Yeah.
probably boring people already, but it's the point is like we should not just like build one massive farm in Spain or in the
You
Sahara,
lost
because
you
then
lost me a
you're
long
gonna
time ago. I'm very yeah, I lost a long time ago. I'm sure that some people listen. I just listened to the last sentence, your conclusion. I just know it's well thought out. But keep going. I'm so
well
bad
the
at
other the
focusing on this stuff.
Well, it's really boring, to be honest. Like I like boring things like accounting and energy policy, which, so a bit of a nerd in that regard. But
Good.
like the other
All
thing to
right.
keep in mind too is like these projects, distribution and transmission projects especially, are notoriously like red tape heavy. So like trying to get all
Yeah.
the land rights that you need for like a multi-hundred-mile or like 1,000-mile like high voltage transmission line, all like you need to have like you know
Oh,
like
geez.
obtain
Yeah.
land, or like sometimes taking it over like eminent domain, and you're going to have locals that are fighting you, and you're going to
Ugh.
have like, and there's like it's a huge process. So even if you say, okay, great, let's just do a huge thing in Spain, let's go as fast as we can, it's still going to take you 5 to 10 years to build out the transmission, just because that process is so time
Yeah.
consuming, and there's so
Only in
much
China. China
regulation.
wouldn't be an issue though. Probably right in
Yeah,
China that would
no,
not be an
exactly.
issue.
Exactly. So one of the
That's the
people in my
advantages
comments
of
was saying
China.
like,
Yeah.
yeah, like China's leading on this, and it's like, yeah, that's great. And but it's crazy. I've got to tell maybe one anecdote on that. So I,
Yeah.
spent a little bit of time in China, and actually was there in '99, before, like while they were building the Three Gorges Dam. So I went and
hmm
like toured all these small villages that were just going to be underwater when the Three Gorges Dam was finished completing, and this pond was there. So it's like you can give China huge amounts of credit because they can mobilize a national infrastructure project like that, and the Three Gorges Dam is like a huge, laudable project. But there's something to be said for our system with all its red tape that will say, hey, how about we don't like drown this city and like relocate these millions of people that are like with all of this thousands of years of cultural heritage and temples that are going to be just completely destroyed forever. Like
Yeah.
we should admire the good parts about China's system, and I think we should also say, all right, maybe there's a reasonable cost of the red tape that's worth keeping in mind. But I do think for that reason, for the fact that it is hard to do huge projects, that maybe millions of smaller projects on rooftop solar and smaller batteries is going to be a lot easier than like a huge national European wide national transmission system.
Mm-hmm. Good. All right. Well, that was a great answer. Lots of information. I'm probably gonna have to re-listen to it myself because you're a bundle of
Don't
information
torture
on this thing,
yourself.
Matt. No. Yeah. No, the energy side, cars are sexy and awesome to me, and but the energy side has never really, done it for me. I don't know. I've always been like, energy, cool, paradigm shift, whatever. But like, oh, batteries and solar, neat. All right, but I want the cool car. I want full self-driving cars now, robots. That's cooler to me. I don't know.
Yeah, like, well,
Yeah.
you've got the solar roof, like you've got the cutting edge thing and like the
Yeah, I
power
do.
walls
I
and
do.
everything, and like
Yeah.
how much joy do you get from that compared to your car? I would guess it's very little, right?
The most joy I get is when I pull up the app and go to that screen and see the little lines, the graphics. That's the joy I get from it. And then there's like obviously dollars saved in my bills, obviously, which is nice. But yeah, you're right. It looks kind of cool too sometimes when you look at it from a distance.
Yeah,
Or
but
from a drone.
it's clearly not the sexy part of the business, though.
No, that's right. That's right. All right. Well, good chatting this week. We've gone past our time, and we'll see everyone here next week, same time, same place. I'm going to the Giga Factory party in Austin, so I'll report back on our next week's live stream what I learned there, and it should be a fun time going to that cyber rodeo. So I'll tell you all about it, Matt. Yeah,
Yeah, I'm
sorry you can't
jealous.
go.
That's
Sorry,
all right.
sorry you
I'll
can't
go to
go.
another event on the road, I'm sure. But
Yeah,
with a newborn at home and all the other kids, it's not the right time for me.
yeah.
Maybe one last question. Do you think there's a surprise or any kind of like mystery reveal or anything like that at the event?
I want to say yes, but I get so excited so much, and I'm let down a little bit. My realistic most is just that there's going to be several cyber trucks for us to kind of test drive. That we can get in line to be like
That'd be
a
awesome.
dozen or
Yeah.
a couple dozen cyber trucks for us to drive a little bit. And but that's kind of what my hope is. Anything beyond that, it'd be cool if there's like a bunch of bots walking around or something. I doubt that. I don't think that's the case. Maybe a year from now. So yeah, we'll see. If there's a surprise, I don't know. I mean, Elon, I think would show up there at some point to give like a talk or something. We'll see. But I'll meet a lot of employees there and other Tesla, fanatics local and some other folks I know that are going. So yeah, it'll be fun. A good get together.
Yeah, I'm looking forward to hearing all about it, and
Yeah.
I'm sure there'll be lots of Twitter posts. So I'll be watching all about it
Yeah,
later this week.
sure. I'll try. Maybe I can figure out there's like a way to live stream on YouTube from your phone, I would think, right? Maybe I should figure out a way to do that and like if there's some kind of
Probably.
reveal. Yeah. All right. All right, guys. I'll talk
Thanks
to you
for watching,
later.
everyone.
All right. Thanks, guys. All right. Bye.